Former President Donald Trump and Federal Reserve Chair Jerome Powell are at odds over interest rates. Their disagreement is not just a personal feud, but a reflection of a much larger and ongoing debate about how the U.S. economy should be managed and who gets to make those decisions. The stakes are high, and the outcome could affect millions of Americans. Trump believes that interest rates are too high, and he's made it clear that he thinks the Federal Reserve is making a big mistake by keeping them elevated. In his view, high rates are putting unnecessary pressure on American businesses and families, making it harder for people to buy homes, start companies, or even pay off their debts. He thinks this is hurting the American economy, slowing down job growth, and threatening the prosperity that he claims his administration worked hard to build. Trump often points to struggling factories and shuttered storefronts as evidence that the Fed's policies are out of touch with the needs of everyday Americans. Trump has not been shy about voicing his criticisms. He's taken to social media, campaign rallies, and interviews to blast the Fed's decisions, arguing that lower rates would unleash a new wave of economic growth. He has even called for Powell's removal from office, a move that would be unprecedented in modern times and could shake confidence in the independence of the central bank. Powell, on the other hand, argues that the Federal Reserve is simply trying to control inflation. He insists that the Fed's primary responsibility is to keep prices stable, even if that means making unpopular decisions. The Fed has been raising interest rates to slow down the economy, hoping to prevent runaway inflation that could erode the value of people's savings and incomes. Powell and his colleagues believe that acting now will avoid even greater pain in the future. They believe this will bring inflation under control, protecting the long-term health of the economy. Many economists agree that unchecked inflation can be devastating, especially for those on fixed incomes. However, Trump sees this as a deliberate attempt to sabotage his economic legacy. He claims that the Fed's actions are politically motivated, designed to undermine his achievements and slow the economy ahead of elections. This clash of opinions reflects a larger debate about the role of the Federal Reserve. Should the central bank respond to political leaders, or should it remain independent, even if its decisions are unpopular? Some believe that the Fed should be more responsive to the needs of the economy, adjusting rates quickly to support growth and jobs, especially during tough times. Others argue that the Fed needs to remain independent from political pressure, so it can make tough choices that are best for the country in the long run, not just for short-term political gain. The outcome of this debate could have significant consequences for the future of the American economy. The decisions made now will shape everything from mortgage rates to job opportunities for years to come. Higher interest rates make it more expensive for businesses to borrow money, invest in new projects, or expand their operations. This can slow down hiring and make it harder for new businesses to get off the ground. This can lead to slower economic growth, fewer jobs, and more uncertainty for workers and families across the country. Lower interest rates can stimulate economic growth, making it easier for people to borrow and spend, but they can also lead to inflation if the economy overheats. Striking the right balance is a challenge that has divided policymakers for decades, and the debate between Trump and Powell is just the latest chapter in this ongoing story. Donald Trump's stance on Bitcoin has been anything but consistent. In the past, he expressed skepticism about cryptocurrencies. He even suggested that they could be used for illicit activities. However, his perspective seems to have shifted in recent years. Trump's newfound embrace of Bitcoin is likely tied to his desire to make the United States the crypto capital of the world. He recognizes the growing influence of cryptocurrencies in the global economy. He wants America to be at the forefront of this technological revolution. Trump's change of heart on Bitcoin is a testament to the evolving nature of the cryptocurrency industry. What was once seen as a fringe movement is now gaining mainstream acceptance. Trump's embrace of Bitcoin could help to legitimize cryptocurrencies in the eyes of many Americans. In recent years, Donald Trump has taken several concrete steps to support the cryptocurrency industry, signaling a dramatic shift in the federal government's attitude toward digital assets. As the world of finance rapidly evolves, Trump's administration has made it clear that it intends to embrace innovation rather than stifle it. This approach marks a notable departure from previous administrations, which often viewed cryptocurrencies with skepticism or even outright hostility. One of Trump's most significant moves was appointing pro-crypto figures to key positions in his administration, ensuring that those shaping policy have a deep understanding of blockchain technology and digital finance. These appointments are not just symbolic. They have real implications for how regulations are crafted and enforced. For instance, he nominated Paul Atkins, a well-known advocate for digital assets and financial innovation, to head the Securities and Exchange Commission, or SEC. Atkins has a long history of supporting market-driven solutions and has spoken publicly about the need for regulatory clarity in the crypto space. Atkins' appointment signaled a potential shift in the SEC's approach to cryptocurrency regulation, raising hopes among industry leaders and investors that the agency would adopt a more balanced and forward-thinking stance. Unlike his predecessor Gary Gensler, who implemented stricter regulations after the 2022 crypto market crash, Atkins is expected to foster a more innovation-friendly environment for the industry. This could mean fewer barriers for startups, more opportunities for growth, and a renewed focus on protecting investors without stifling progress. Furthermore, Trump appointed David Sachs, a prominent entrepreneur and investor, as the White House AI and crypto czar. Sachs brings a wealth of experience from Silicon Valley and has been a vocal supporter of both artificial intelligence and decentralized technologies. This newly created position underscores the importance Trump places on digital assets and their role in the future of the American economy. By elevating crypto and AI to the highest levels of government, the administration is sending a clear message. The United States intends to lead in the next wave of technological innovation. Sachs's expertise in both artificial intelligence and cryptocurrencies makes him exceptionally well suited to guide the administration's policies in this rapidly evolving landscape. As the world watches, these bold moves could usher in a new era for digital assets in America, shaping the future of finance for years to come. While Trump has emerged as a vocal proponent of Bitcoin, positioning himself as a champion for the cryptocurrency movement, not everyone in positions of power shares his enthusiasm. Trump has repeatedly spoken about the potential for Bitcoin to transform the U.S. economy, and even hinted at making America a global leader in digital assets. His vision is bold, aiming to integrate Bitcoin into the nation's financial future. However, Federal Reserve Chair Jerome Powell remains deeply skeptical of this approach, offering a stark contrast to Trump's optimism. Powell has consistently downplayed the significance of cryptocurrencies, often warning about their volatility and the risks they pose to both investors and the broader financial system. He views them as speculative assets rather than legitimate currencies, emphasizing that they lack the stability and regulatory oversight of traditional money. Powell's stance on Bitcoin directly challenges Trump's vision of making the United States a Bitcoin superpower, setting up a potential clash between political ambition and institutional caution. Powell has publicly stated that the Federal Reserve has no plans to hold Bitcoin as a reserve asset, reinforcing the central bank's commitment to traditional financial instruments. He argues that current laws prohibit the Fed from doing so, and that any change would require significant legislative action and careful consideration of the risks involved. This difference of opinion between Trump and Powell highlights the ongoing debate about the role of cryptocurrencies in the global financial system, and whether the U.S. should embrace or resist this technological shift. While Trump sees Bitcoin as a revolutionary technology that could disrupt traditional finance and give America a competitive edge, Powell remains cautious, prioritizing stability and the protection of the existing economic order. For now, Powell prefers to focus on the Fed's existing mandate of maintaining price stability and maximizing employment, leaving the future of Bitcoin in the U.S. uncertain and hotly contested. The year 2024 has been a roller coaster ride for Bitcoin. The cryptocurrency's price has experienced significant volatility. It's been influenced by both market forces and political events. Despite the turbulence, Bitcoin has demonstrated remarkable resilience. One of the most notable price surges occurred in early December, when Bitcoin surpassed $100,000 for the first time. This surge coincided with Trump's vocal support for cryptocurrencies and his criticism of Powell's interest rate policies. However, Bitcoin's price also experienced some dips. For example, the cryptocurrency's value dropped by 5% following Powell's December 18th press conference. During this conference, Powell reiterated his skepticism about Bitcoin, comparing it to gold and emphasizing its speculative nature. Despite the price volatility and political debates, Bitcoin has remained remarkably resilient. The cryptocurrency has consistently rebounded from dips. This suggests that its underlying fundamentals remain strong. Bitcoin's ability to weather these storms is a testament to its growing acceptance as a legitimate asset class. Investors are increasingly recognizing the potential of Bitcoin as a hedge against inflation and a store of value. They are also drawn to its decentralized nature, which makes it resistant to government interference and censorship. Bitcoin's resilience in the face of adversity is likely to attract even more investors in the years to come. Trump's criticism of Powell and the Federal Reserve has raised concerns about the politicization of monetary policy. Some worry that Trump's attacks on the Fed could undermine its independence. They fear that this could lead to poor policy decisions that harm the economy. The Federal Reserve was designed to be independent of political influence. This allows it to make objective decisions based on economic data rather than political considerations. However, Trump's public pronouncements about interest rates and his calls for Powell's removal threaten to blur the lines between politics and monetary policy. This could have long-term consequences for the credibility and effectiveness of the Federal Reserve. Proponents of Bitcoin often cite its potential to promote financial freedom as one of its most compelling features. They argue that Bitcoin's decentralized nature makes it accessible to anyone with an internet connection. This could empower individuals who lack access to traditional banking services. Bitcoin could also provide a hedge against government overreach and economic instability. In countries with weak institutions or authoritarian regimes, Bitcoin can offer a way for citizens to protect their wealth from confiscation or hyperinflation. While Bitcoin's potential to promote financial freedom is undeniable, it's important to acknowledge the risks. The cryptocurrency's volatility and its susceptibility to illicit activities are legitimate concerns that need to be addressed. The ongoing debates about Bitcoin, interest rates, and the role of the Federal Reserve point to a larger truth. The world is on the cusp of a digital revolution in finance. Cryptocurrencies, blockchain technology, and other financial innovations have the potential to reshape the global financial system. It remains to be seen what the future holds for Bitcoin and other cryptocurrencies. Will they become mainstream forms of payment? Will they replace fiat currencies as we know them? Or will they remain niche assets for tech-savvy investors? Only time will tell how this digital revolution will unfold. However, one thing is certain: the financial landscape is changing rapidly, and those who adapt quickly will be best positioned to thrive in the years to come.